Hey everyone, welcome back to Corporate Decoder, the place where we decode the hidden stories behind those boring corporate filings. Today, we're diving into a filing from PARKERVISION Incorporated that has got a bit of a personal touch. A director is buying a chunk of the company's stock. Let's see what that really means before we jump in. If you love getting straight insights from real company documents, make sure you subscribe. And for those who want to chat more about these findings, our Discord channel link is in the description below. Let's get into it. Alright, so this is a current report, an 8K filing. Think of it as a company's way of quickly telling the US Securities and Exchange Commission and investors about big important stuff that just happened. This particular filing is dated the 14th of November 2025, and PARKERVISION Incorporated is the company in question. The main event here kicked off on the 14th of November 2025. This is PARKERVISION Incorporated, a company incorporated in Florida. They are reporting on a significant event that involves a material definitive agreement. So, what is this material definitive agreement? On the 14th of November 2025, PARKERVISION Incorporated, or the company as they call themselves, signed a subscription agreement. This agreement is with Lewis H. Titterton Jr., who is actually a director on the company's board. Here is the juicy part. Mr. Titterton is agreeing to buy a substantial amount of the company's common stock, 4,761,905 shares to be exact. He's paying a total of $1 million for this. The price per S-share comes out to $0.21. Now, this price is pretty interesting because it matches the last reported selling price of their common stock on the OTCQB venture market on that same day. The 14th of November, this suggests the deal was structured to align with the current market value. The deal is expected to be finalized really soon, by the 18th of November 2025. This deal was done directly between PARKERVISION and Mr. Titterton. There was no middleman, no investment bank or broker helping to facilitate it. This sale isn't a surprise because the company had already put in place a way to sell its stock. They have what is called a shelf registration statement filed back in April and approved in May of 2025. This allows them to quickly offer and sell securities without having to go through the entire registration process each time. A more detailed explanation of this specific offering will be filed with the SEC in something called a prospectus supplement. Now, since Mr. Titterton is a director, this transaction had to be carefully reviewed. The filing states that the members of the board who are not involved in this specific deal, the independent directors approved it. They did this to follow Florida's business corporation laws. This is a standard procedure to ensure fairness when a company does business with its own insiders. This is just a summary. For all the nitty-gritty details of the actual subscription agreement, they've filed it as an exhibit, which is basically an attachment to this report. They also included an opinion from a law firm, Grobard Miller, about the legality of this stock sale. Under this section, they list all the exhibits, the supporting documents for this report. This is the actual agreement we've been talking about. And finally, the report needs to be signed off. This is done by an authorized officer of the company. The report itself was signed on the 17th of November 2025, a few days after the agreement was made. Here we see Cynthia French, the Chief Financial Officer, signing this report on behalf of PARKERVISION Incorporated. This gives some credibility to the information provided. Now, let's think about what this all signifies. A director buying a significant amount of stock directly from the company for cash is a pretty strong signal. It suggests that Mr. Titterton believes the company's stock is undervalued or has strong prospects for future growth. He is putting his own money on the line, which usually indicates a high level of confidence. From PARKERVISION's perspective, this is a direct injection of $1 million in cash for a company that might be looking to fund operations, research, or expansion. This is valuable. It is also a way to get this stock into the hands of someone who is committed to the company's success, rather than potentially volatile public trading. However, it is important to remember that Mr. Titterton is an insider. His decisions are often based on information not readily available to the general public, although this deal was structured to match the market price. The approval by disinterested directors is a good sign that this was a fair transaction. The fact that this is being done under a shelf registration statement means PARKERVISION has a plan to raise capital. This $1 million is just one piece of that puzzle. It will be interesting to see if they utilize this shelf registration further in the future. Overall, this filing might seem simple, but it tells a story of confidence from an insider and provides a cash infusion for the company. It's a positive sign, but as always, it's crucial to look at the broader financial health and strategy of PARKERVISION Incorporated. Alright, that is our quick decode of PARKERVISION's latest filing. What is your take on this insider stock purchase and what it means for the company's future? Drop your thoughts in the comments below if you found this analysis valuable. Hitting that like button really helps us out, and of course subscribe for more deep dives into corporate filings. Don't forget to join our Discord community, the link is in the description. Thanks for watching, and we'll see you in the next video.